from one earnings to another. That is Dish TV, of course. But Mr. Motilal Oswal, CMD of Motilal Oswal Financial Services, joins us on the show as well to talk about their numbers. Good having you, Mr. Oswal. Thanks so much for taking the time out. Put the results into perspective. How has the quarter been? Because everybody would want to believe that the market activity that got heightened in end September, early October would probably have a bearing on the quarter gone by as well. Has that happened?
Yes, I think in the last month, that is September, especially the second half of September was, I would say, very good. Although we are not able to sustain at those kind of levels if you look at the current month. I think the last quarter, I think first 2 months were very bad. We covered in the last month. So overall, I would say it's a fairly satisfactory quarter where we have seen the PAT growth about 13% and a revenue growth about 5%. Overall, I would say, I think since we have shifted to our new premises, new building, so we must consider that about 4 to 5 crores is the additional kind of burden which we had taken in this quarter. So 23 crores PAT after taking a hit about 5 crores. So 27-28 crores would be the right kind of amount for this quarter against 21 crores PAT which we shown in last quarter. So from that perspective, I would say it's a decent kind of growth in this quarter.
Right. What is the expectation going forward for the remaining 2 quarters? Do you think that activity could pick up purely in terms of volumes?
It's very difficult to really predict what we have seen. I think if we kind of see some kind of favorable, I would say, developments coming from the political level as well as from RBI level, where we all are hopeful, I would say we could really, I think, sustain or I think have a better performance. Our business is very kind of, I think, cyclical, and I would say I think last quarter was quite tough in that sense. But despite that, I think we have been able to make our kind of, I think, business much more, I would say, stable, keeping in mind the very tight kind of control on the cost. I think my sense is that in terms of market volume, the cash market average is slightly higher than what we have seen in previous quarters. So I think that gives us the confidence that we'll be able to, I would say, sustain at these levels.
It's different segments, Mr. Oswal. What's performed and what's not? I mean, I'm only wondering if you indeed mentioned that this quarter, at least the volumes haven't shaped up as well as September. Are we to assume that this quarter would probably, if things continue the way they are, would be slightly more tepid than Q2? And for Q2 in particular, what business segments have performed and what haven't?
I think in last quarter, I would say broking was fairly stable at the same levels. Investment banking was also really, I think, not much traction. Asset management business is doing well, both from the private equity side as well as on the mutual fund side. There we are seeing some kind of, I think, traction on that. And I would say the other segments would be quite kind of, I think, stable in that sense. So overall, I would say asset management business doing very well, investment banking and broking becoming stable kind of, I think, businesses.
Okay, we don't get you that often, Mr. Oswal, these days, so can't let you go without asking you your view on the market situation as well. A lot of people, a lot of experts in the past couple of months have stated that we are headed for newer highs and this is probably a good time to accumulate if the markets consolidate. What's your own sense?
I think if you look at the kind of macro numbers, the situation is not really, I think, very great or very good on that side, unless we see some changes in the RBI's kind of, I think, policy angles for interest rate reduction. Look at the kind of quarterly numbers, expected numbers. I think we expect just 1 or 2% kind of PAT growth in XX companies, which is, I would say, very muted kind of, I think, quarter. I think the fiscal deficit going again really, I think, beyond what we have provided for. Inflation still remain on a high level. What is kind of, I think, good thing is that FIs FIs flows continues, and that's where the market really, I would say, is sustaining at these levels. I think we all are very hopeful that the government now, I think, has come out of that kind of, I think, policy paralysis. So we think that things will improve from here and we'll keep on seeing some kind of, I think, action, whether it is on PSU divestment or whether it is in terms of some kind of interest rate reduction from the RBI side. So I would remain hopeful on the markets overall. from the kind of I think shorter term perspective. Although longer term trend, they still will decide about various macroeconomic factors, which I would say I think we are going through a tough time.
Where do you think interest will come in? I mean, where do you think leadership will come in into any kind of activity that you see in the market? And would this interest largely be centered around the large caps or mid caps?
I would say interest remains in large cap, although I think some action you've seen in small mid cap, but that's small mid cap always will have the lag compared to the large cap. So my feel is that still the traction will remain on the large cap side, and I think the biggest trigger, as I said earlier, would be if we see some kind of relief from the RBI on interest rate side. That will give, I would say, good relief to the corporate profitability as well as I think to the markets.
Great. Mr. Oswal, before we let you go, really, final word. You've given your broad synopsis of what you think are the steps needed, but your view, we're just about on the verge of Diwali, this Diwali to next Diwali, so next 12 months or 18 months. You believe we are headed for significantly higher levels, or you believe we'll be range bound?
My sense is that it will be range bound because I think if you look at slightly longer term, you see all kind of political kind of I think issues coming in. Now we'll have to prepare next year for the elections. The overall, I would say the fiscal deficit scenario also is not great. There might be some kind of populist measures coming in here and there. So I would be about cautious, and so we can say that it will be range bound kind of market.
Great. We'll leave it at that, Mr. Oswal. Thanks so much for taking the time out, and all the best for the next quarter. We'll of course talk to you post your numbers then as well. Thanks for taking the time out and accommodating this interview request. That's Motilal Oswal, done reasonably well in light of all that's happening with the equity markets and therefore the impact on the broking houses, and fairly upbeat about how the quarters ahead would shape up, though it does believe for the markets front we'll be range bound